Hi guys, this is Annie from Mommy Trades. Yes, you guys are listening to me after a long time. It's been a little bit of a ride for me for the past 7 weeks. My father was going through some health issues. Now, thankfully, things are back to normal. So here I am. I wanted to cover a video about the questions that you guys as members have. So today, the video clip that I'm making about is that what to look for while you are evaluating a chart, whether to get in or not once the price level is hit. So you guys know that I provide chart levels in the morning before market open, right? Which are potential resistance and support levels. I do my homework at night, and during the early morning market action, I tweak them accordingly where we will be opening. So this video clip will focus on what sort of price action to look for when you decide to enter a trade. As I always say, there is no straightforward answer or a formula, right? There is always a mix of things. But once you go through it, once you do it every day, it's like a rinse and repeat process. You will develop those chart reading skills and you will get the feel for the move. Best way I can do this is by showing you some recent examples. So I will be going through some multiple charts with you guys in this video, and we will see where it worked and where it failed. And then we will go with reasoning in both the cases. So first of all, you can see these are the trigger levels from February 7th, Friday, 2020 morning. So I had posted the level for Amazon. The call trigger for Amazon that I shared on February 7th was 2060. And the put level was at 2034.6. Now let me drill down to the chart of that day. So here I have the 2-minute chart for Amazon that you see here. Okay. We started the day a bit choppy, and there was some sideways action, and you see it was a quiet morning yesterday. And then we started seeing some consistent bullish price action in the overall market as well, and in Amazon as well. So I let the chart tell me if it's bullish or not. So when I see more bullish bars in 2 minutes, that means it's kind of trending up or gearing up. I see consistently higher close in 2 minutes, which was above the 9 EMA. So, and I see more bullish trend bars in the 2 minutes time frame. Now let me drill down to the 5-minute chart here. You see, same story. We don't see any top wicks. There are higher highs. There is no follow through to the downside to any bearish trend bar that you see here. And if I pull out the 10-minute chart, also it will be leading up to the call trigger level, and we see no bearish bars here. Even if there is this red bar that you see, it has a bottom wick, which shows that the buyers are in control and there is some buying pressure still going on. So now I personally like to take an entry as the 2-minute bar looks to be closing above the price level for the call entry. If this was early morning, sometimes you get a candle close way above the trigger, and it can be very hard to trade in that case, like if you want to stick with the candle closure rule. So sometimes I do break this rule and get in after 1-minute bar too, but you must be careful, and you have to see the overall market trend, the overall market condition, and see if it's supportive of your action there. So here is my close in the 2 minute right here. That is, you see the Amazon closing above the 2060 level, and so I got in my 2070 calls right here on the close of this candle in the 2 minutes bar. Now when you evaluate the price action which led to this trigger level, that will tell you the story as to how we got there. If we got there with nice, consistent, bullish price action, that should provide you with some confidence to be in that trade, right? Now, if the things to look for are that were we choppy with volatile looking both bullish and bearish bars? Do we see a lot of wicks on either side or the side that you don't want to be going towards? That should tell you that both sellers and buyers are fighting for direction. I hope this clears up when to enter a trade. Okay, so now the other thing that is important to see is that how long to hold on to a position. Well, personally, I buy anywhere from 2 to 5 to 6 contracts at times. So it depends on the price of the contract, also my confidence on that stock, the overall market trend. Once I'm in a trade and don't see any bearish bar in 2 minutes, and even if I do see a bearish bar, I would like to see some kind of decisive follow through to the downside before I take my profits. So that is also one thing. But that being said, if you see that the overall market is choppy and you're getting some nice delta profit of some depending on the stock that you're trading, it's okay to be nibble on days when you have some overall market action is choppy. And I always say be conservative, take your profits. But if you have few more contracts and you're riding some, so it is okay to keep riding the leftovers until you see a decisive follow through to the upside or to the downside, depending on if you're calling calls or puts, before taking your profits, final profits. So as you see that the 2-minute bars, they don't give me any reason to come out of my position, so I kept on holding. So you see in this Amazon chart, I don't see any reason to come out of my position completely, so I am holding here. I do take quick profits and I do trim. So after trimming my position initially, I do like to ride with one contract open and to see if it gives me more squeeze. So what I will do is that I'll keep riding in until I see some kind of decisive follow through to the downside. So here I see a bearish bar in the 2 minutes time frame with a top wick. Then I would see how the next bar would look like before I finally take my profits, and here I got stopped out with nice good profits still. So you see, these are the little things to look for, to how long to hold on to your final positions and when to come out completely. So now going to a 5-minute chart for this Amazon trade, you will see the same kind of story that we were looking at when we were in the 2-minute chart. It is always good to let the chart tell you when to exit, right, instead of the P&L guiding you where to go. So, and I also have some more detail written up in the email, in the link that I would be sending you guys of all this, so you can read up to that and back test it and see for yourselves also. So now let's look at an example of where getting in after the level was triggered, but that trade did not work. So while we go through it, focus on the price bars, focus on the swing highs, lows, look at the 5, 10 and the 15-minute charts leading up to the trade. So this will provide you with the clues at what has been going on and help you read the price action better. So here is the example for the Roku trade that we took on the January 29th, and this is the trade that did not work. We had a put trigger for Roku at 125.9, and you see them triggering. This is a 2-minute chart, by the way, that I'm showing, and it triggered around 9:36. So unless you were pretty quick, you may have come out with some profits if you were very quick. But otherwise, we saw that we continued with some sideways action here. Now this was kind of a little frustrating action. Some of you may have come out now, or this was some congestion zone, or some of you may have waited for some more squeeze, and or you guys may be flat at this point. So then following, we saw some we saw a bullish bar coming up in the. So there was some congestion right below the trigger for puts that after we entered, and then that should have been the first sign that it is taking time. It still looked all over weak to me, but it still looked that we maybe this trade of mine will take some time for for it to go where I wanted it to go. So we waited a little bit longer here, and then we saw this bullish bar, and then we saw this bullish bar closing above our put trigger here with some volume coming in. So that could have been our first sign to come out, but still you see this yellow line. This is representing the 20 EMA. So but still my closure of the candle was below the 20 EMA. So if we want to stay in the trade, we can see, but my idea behind trades is that once we don't get the price action that we are looking for, and we are seeing the sideways action, so why waste our energy and time more into that trade if it's giving, because it's not stock, it's an option, and of course it brings that premium burning element with it. So once we start seeing that sideways action, I just start getting a little uncomfortable there. So I decided to come out of those puts with a little bit of loss, or I think flattish there on this one. So if you see the 5-minute chart here for Roku, you will see the same kind of story, same sideways action, and then you see that some of the bars, they started closing above the 20 EMA. Is that when we start getting that idea that this trade is perhaps not working, and it may have gone down. It might, would have gone down again, but it's just that I just don't like to waste our times, our precious premiums on sideways action. So and you see, looking at the chart, there's the 5-minute chart, you see how the price hits the trigger put level and it bounces off from that level. So it hits the put level again here at 125.9, and it bounces off again from there. So that kind of started telling me that this is some kind of support that it's using as its price, and it's bouncing off or from the put level. So maybe this is the time to take my piece of loss on it and just come out of this trade. So that should be your signals. That should be our signals to come out of the trade. That is not working. And you see, when we see that the price kept on bouncing from the put trigger level, we decided to come out of the trade, and you see how it bounced off and went a lot higher and touched 129.75 or something like that. So it's better to take lesser profits than to anticipate and to sit thinking or hoping for something better to happen. So it's better to come out with little loss than to sit on your hands with hope. There's always another trade. Not all your trades would work. Yes, there will be a couple of them that will not work out, that will give you that fake out, but our idea, our aim should be to outnumber the good ones, and that's what we try to do every day. So profits and loss, they are part of trading, okay? So we all have our own individual style of trading. Mine relies around reading price action only. I stress on price action. I do not care about many indicators. To me, price is only the thing that matters. At any given time, it reflects the latest information that is out there about a stock or a name. So whatever the fundamentals are saying, whatever the news is out there, it all comes down to zero, because price tells you what the market is feeling about stock at that certain time. So this is one of the way to read the chart and its certain price action. You can also incorporate short-term moving averages into your analysis, but always keep in mind, if you are using any moving average to guide your exit, you should be ready for some range, because the stock can go very well, it can do very well, and it could go towards the moving average and give a wick at close. So candle closure, it always plays the most important part whenever you are playing any trade. So guys, hope this video was useful to you and all the information. I will be posting it on my YouTube, and you can go review it, read it, because back testing is always important. And hope you guys will learn a little bit from this video of mine. So see you guys on Monday. Hope you guys have a fabulous weekend. Over and out, mommy. Bye.